3, 2, 1. Hey everybody, it's me, the Einstein of Wall Street, for Trade Like Einstein. I don't even know who I'm talking from. We're going to be doing stuff on YouTube, on Instagram, on Twitter. We're breaking this market down like nobody before has ever done. We're making it accessible mentally, psychologically, physically if we have to, and clearly from a fashion sense. We're here with the new New York Post best man dressed man on Wall Street. Some say he raided Walt Fraser's closet. Some say he looks like a box of Lucky Charms. I just say he's the hippest, coolest, drip-ridden analyst on Wall Street, besides being #1 in tech. We're here with Tim Anderson, trader on the floor of the stock exchange. In my opinion, one of the smartest guys down here as well. So me, I know I look like Einstein. I'm not the smartest tool in the shed, but I surround myself with people who are way smarter than me. See if you can turn my phone off for me, Andrew. Anyway, we're here to break down the market. We are here coming into the end of the month of May, a month that a lot of different people thought were not going to turn out the way this one did. And due to Nvidia, due to the tech sector, due to it's been back and forth, depending on what the Fed says, and they're talking out of both sides of their mouths. The market has done a bit of a bob and a weave. We're coming into the end of the month. Tomorrow is the MSCI rebalance. Obviously, Nvidia has been the flavor of the moment, and that's been a stock that's been touted by this incredibly genius of a gentleman for a while. But anyway, since we spoke last week, Nvidia's up another $100 or more. You know, the market has gone through actually a couple days of consolidation. Tim had a really interesting analysis of what the market's done over the last couple of days. So I'm actually going to toss to him because he has a couple of questions for you. But Tim is fascinating in the way that he'll break down the way that all the different indices, the Russell, the Dow, how they act, right? And then how many stocks are up or down volume. Anyway, share with us.
Today's a fascinating day for the market because you have some profit taking in some tech stocks that have had really, really big runs. Salesforce, Dell Computer. These have been great stories all year long and even before that. But they're down quite a bit today. So the Dow is seriously underperforming the S&P, but the Russell is just crushing it, up 1%. Over 1%. Advancers are beating decliners by better than 3.5 to 1, which is unusual when you see the Dow down over 300 points. And clearly a lot of tech stocks have had really big moves this year. Now, as a very savvy analyst, obviously your work starts with fundamentals, but how do you talk to clients about this is very healthy profit taking, maybe some group rotation. Group rotation is always healthy in the market versus, you know what, maybe this might be the start of some more focused institutional selling.
Yeah, you raise great points, especially on the tech side. Look, I think, and Peter and I have talked about this for a while, there's a have and have-nots. And if you look at the godfather of AI, Jensen and Nvidia, as they continue to crush numbers and we see demand continue to accelerate, I think this is a stock that we're going to be talking about $4 trillion and that battle with Apple and Microsoft. But you look at Salesforce, you look at Workday, you've had choppy numbers. So these stocks, the way that they're priced, any sniff of just any sort of issues like we saw with Salesforce, that's going to cause a sell-off really across the rest of software and across tech. Similar like we saw at Palo Alto last month.
Yeah. And wasn't Nvidia's earnings day a fascinating day? Because clearly you had this gap up opening in all the AI related stocks, and by the end of the day, Nvidia was almost one of the very few AI driven stocks that was still green. And that almost led toward what you just talked about, the have and the have-nots. Is there one big have, Nvidia? And as Nvidia goes, it might be negative for everybody else because they're just eating everybody else's lunch?
Look, that's why on Nvidia earnings, the world was watching. You know, Peter's watching, eating his high-end caviar, waiting for earnings to hit. When I look at what's playing out right now, it's all about the second, third, fourth derivative of AI.
Yeah.
And I believe now the rest of spending in terms of tech is starting to hit. When I look at names like Salesforce and some others, it's transitionary in terms of the growth. But in my opinion, this is a 1995 moment. I believe tech moves significantly higher for you. And I think a lot of these sell-offs that we're seeing in tech, we sit here 60, 90 days from now, and that was more of a golden buying opportunity rather than the start of a sell-off.
And clearly, when you say 1995, you're talking about, this is similar to the beginning of the internet revolution.
Exactly.
Nowhere near being 1999, which was where we really got into bubble territory, and it was like warning signs should have been everywhere.
Exactly. And look at the revenue, look at the number. I mean, Apple, $110 billion buyback. Nvidia, 75% gross margins. These companies, they're printing more cash in some countries. So now it's really about what the growth looks like, but also it goes back to like value. I would rather pay up for the Bugatti in the left lane, okay, going 100 miles an hour, than the minivan in the right lane going 45 miles an hour with some bumper stickers saying my kid was an honor roll student in third period. So that's my view in terms of where.
So do you think? Look, we've seen the day Nvidia's earnings came out, it closed at 943. Earnings came out and it went up $100. Clearly, they blew them out on earnings. But since then, obviously, we'll see that in stocks where you buy the rumor, sell the news. It was a curious reaction, the follow through, the days after the earnings came out, and that continuous, constant growth. I think that talks to the thing you're saying, that some people who would normally be looking for tertiary stocks in the sector to buy into, because it's so darn frothy. Think about it. Nvidia was trading in the 960 level, right? The market sold off in April. It got down to 743, and the street was talking about, like we talked about it, run for the hills, run for the doors. It's a fire sale, and as opposed to people sitting with their shopping list, going, "Oh my God, Nvidia's on sale! What an opportunity!" They started getting all scared that this is a bubble, and that it's the only stock holding up the market. And when the tides turn, this thing's going down, back to the 400, 500, 600s. Now they are sitting there no longer eating the caviar or the popcorn, really upset because we saw a 940 to 100 to 1,050, 1,050 to 1,150, and we're seeing a continuing surge on that. So you're saying people are willing to pay that premium, and still, even at these levels, because it is best of breed.
But also ride the winner. In other words,
ride the winner.
Nothing in this market has taught you, if you sell your winners when fundamentals are playing out in this revolution, as you guys know better than it, that's been the wrong trade. That's why Nvidia, Microsoft, I could argue some other semis, you look at ServiceNow and some others, but there's the sniff of any sort of you look at Salesforce, you look at Workday, you look at any of these other names, I mean UiPath and some others. So it's a have-nots. But I believe we're in this little gap where AI is actually disrupting some sales cycles. That's what Benioff talked about with Salesforce, because it's transitionary growth. They're going to see the gold at the end of the rainbow, but right now we're in this period where any bad news, everyone runs for the elevators, and that's why Salesforce is down 20%. We believe that is a golden buying opportunity.
Now do you think Nvidia is a true, what everybody used to talk about, unicorns in the market? A few years ago, that was a big buzzword. Is Nvidia a true unicorn? Because even though the stock price has had a near parabolic move, for a guy like you that's a fundamental analyst, the valuation is really not expensive.
Well, he hits a...
You're saying it's not expensive,
No.
right? But anybody looking at the price of the stock would go,
but you can't
a year ago, in February 2023,
but the
it was at
reality is
$108.
But also
their
went from
sales and
$8
earnings are
and to his point, you went from $8 of earnings to $12 to ultimately, forget the split, $40 of earnings potential,
Right.
a 5x. So as much as you could just look at the stock, you look at the numbers, the Capex for tech, it's unlike anything we've ever seen. And I think that can really continue to be a point. It's a fourth industrial revolution. You find your winners, find your spots where you want to own them. But I think sometimes in the panic, it creates opportunity.
But let's think, what I hear a lot from young retail traders is, and a lot of people on the street, their fear is that the market is completely being held up by Nvidia, by the Magnificent Seven. And if there were the change, look what happened in the Dow, the divergence the other day when there were two stocks in the Dow that got eviscerated. Boeing was one of them, and I don't remember what it was. And they're feeling that while Nvidia was still solidly up. And that they're not saying it's a bubble, but their fear is that, look, this market is not very forgiving. And you know that there are not only are there fundamental investors and an amazing landscape of investors in this market. Look, the people who are trading the market are not people who are struggling in the economy. Let's be clear about that. But at the end of the day, you've got people who are buying the stock at these valuations. You've got people who are scared of any stock that's trading at $1,000+, and that the market, if it were turning, like we saw in Salesforce, yes, the earnings were disappointing. Is it worth a 16 to 20% sell-off? Absolutely not. And you're seeing that with stocks over the last number of years, where a lot of these people, there is a percentage of people trading Nvidia, trading Salesforce, not just investing in it. And when you have trillions of billions of dollars, I would bet, within a tranche of people who are in the trading community. I deal with traders, right? There are people who are invested long-term. Buy and hold is one thing. But what we've seen, the only way for some of these hedge funds and a lot of these brokerage firms to sustain the year of 22, when we were down double digits, was to trade the market. For them to give any kind of returns that didn't get them redemptions, they had to trade. And when you see CRM down 20%, that's people bailing, going into something else, and actually day trading. I try to forensically analyze why the stocks do what they do. We've seen it time and time again. When the slightest inkling of anything negative, it's not stock down $2 or $3. It's a stock down $30, $40, $50. That makes no sense. That's why people should, when the market turns at all, or any stock that you like, the people, the process, the product, you should have a shopping list ready for those times.
But the important thing too is that when you talk about these Capex dollars, Meta, Amazon, Google, Microsoft, what will be Apple, 30, 40 billion combined. Just follow the Capex. And we see it in Asia, going there, chips, to software, to the use case. The point is, everyone that talk about bubble, look at the Capex dollars. It speaks
what
like
does that mean?
That tidal wave of spend,
right,
is coming to the shores of tech. Not just Nvidia. You give Nvidia $10 million for a deal. You got the chips. How do you build it out? That's where you need MongoDB, Palantir, ServiceNow, Oracle, and other semis.
That's the derivative you were talking about.
That's second, third, fourth derivative.
And that's a big differentiating factor from where we are now and where we were with the internet cycle in 99. Because in 99, the big buyers that were doing big Capex spending with Qualcomm and the other big suppliers of high-end routers and what was the hot product at the time, a lot of those companies were buying everything on credit, and 8 to 10 months to a year later, they couldn't pay the bill. Right now, the big Capex buyers are awash in cash and paying up front.
That is, in a phenomenal way to put it, one of the most important differentiators of this market.
This time versus that, right?
Where
not being bought on credit.
Well, because also big tech combined, you have $1 trillion in the balance sheet.
Right, which is crazy.
But I think that is, for anyone watching this, that's, anytime people talk about hype, I'm not saying some stocks could get over their skis.
Of course.
But to your point, anytime someone says there's another .com bubble, it's not.
Nowhere
because
near
of the exactly.
So where do we go from here? We're coming into the end of the month. May was not a bad month. Sell in May and go away was surely the wrong positioning. And there's still, you always talk about it, there's still people who are the inveterate bears who are saying we're at the top, it's coming in, la la la, and that whole story, and it's being held up by the Magnificent Seven. If anything turns, this market's going down. What do you say to that story?
And over Memorial Day, I was drinking rosé, passing some caves, and when I saw a bunch of bears in hibernation mode.
They weren't drinking rosé.
They weren't drinking rosé.
They were drinking IPA.
They were drinking, I think, non-alcohol. But the point is, I believe Fed speak will continue to be out there. They'll speak 10, 15 times a week, Fed speakers. The next move of the Fed, it's a cut, not a hike. Right. It sets up for a scenario. You'll see some of the froth come out of the market. I think the market almost goes a little lower, 2-3%, that ultimately we go higher. And I believe we're going to start talking as we get into the fall about an S&P with a 6 in front of it.
Wow, okay.
Instead of
I'm
just...
gonna have to print up new hats.
And I ultimately believe Peter, with his caviar, might have an S&P 6,000 hat.
And look, and we're coming out with a line of sneakers. We're going to be coming, I had a guy who designed a new suit for you and me. I got to show it to you. So we're going to have a line of clothing. And this is definitely in response to the fact that this market is not frothy. This is the beginning of a revolution. And this is the man who's calling that revolution out. What do you say about the fact Biden-Trump? How is that going to affect the market?
As long as you have a split Congress, it's bullish. I mean, because the less DC does, the more bullish it is for the market. So I'm not one that's just so focused on if it's Trump, this, if it's Biden. As long as you don't have a sweep, a red sweep, I view it as bullish. And that's why I'm not one where it's like this November 6th apocalyptic, because I do think politics sometimes causes investors to make knee-jerk reactions.
And historically, it's never had a major effect.
And you being a market historian know that. You look back and be like, should I have been sold stock X because of that?
Look, we also know that the media loves to be catastrophist in every possible way. We can have 13 weeks of an up market hitting records day after day, week after week. You have one sell-off of 300 points, and it's the end of the world. Yep. It's the death cross. The yield curve's affecting this. You know, the planets are no longer aligning, and we've got an apocalypse. It's not the case. We need to look at the probability. This market runs on probability. And right now, and I also say the market's doing what it wants to do. It's telling us what it thinks of all this information, right? And it's going up. And the price of these stocks, if you think about it, I will look up on the screen on the floor and see stocks that I remember them in the 40s and 50s that are trading in the 200s and 300s. Everyone forgot that. There's this wild gap up that we've seen, this enthusiasm. 2020, the crash of, think about it, 2007, 2008 was the great financial crisis. They threw $800 billion into the market. It took over a 18-month period of time. It took 9 years for the market to get back to even. During COVID, they put $3 trillion into the market over 3 months. The crash of COVID was on March 23rd, 2020, correct. And by August 19th, we were back to even. 2020 up 20%, 21, 28%. And the only thing that dislocated the market was those 18 consecutive interest rate raises, which had to be done, in my opinion, whether you're a fan of J. Powell or not. I believe if we did not do what we did, then we would be on red lines right now. Because this was the components of this situation were different than any other crash.
The last 100-year pandemic. Right. I mean, the point is, when you come out of a 100-year event, there's gonna be a normalization period, and we're still going through that from a Fed perspective.
Okay, so June 1st, tomorrow's day, you're going to see some profit taking. So you talked about that. You said the Russell is up 1%. You're seeing the Dow down, a bit of a bifurcation between that. We're not seeing some of the tech names that have had huge rallies. Okay, while everyone's still staying in their Nvidia trade, you are seeing some of those get sold off a little bit. You do anticipate some profit taking coming into the end of the month.
I think consolidation is always healthy. You get some sector rotation. You have a little bit of healthy churn. As long as you don't see down volume 10 times up volume, advanced declines, negative 4 to 1, 5 to 1 every day. Even though the Dow is down 300 points earlier this morning, the S&P was down maybe 0.5%, 0.75%. The advanced decline line is very, very strong today. Right. Now, it's at the end of the month. It's not the end of the quarter. But you've still got a lot of money managers that will look at their holdings at the end of the month. And if tech has had a really, really strong move this month, which that means the capitalization of that is up quite a bit. And maybe they're saying, you know what, I'm going to be a little overweighted at the end of the month. Right. I'm going to peel back a little bit. And they could sell 5% of their holdings and still have more invested in tech than when they started the month.
Right.
So
because of the move that it's made,
you've got to realize there's a lot of cross currents at the end of the month. And then we want to look at the beginning of June, and we want to, we're a month from the end of the first half, and the big money guys. Part of, I think, the rally in May they run so much money in today's world. They have to plan well in advance about how they want to be set up for the second half of the year.
Second half of the year.
Yep.
And if they're
can't be
underinvested,
thinking about it.
they're not going to wait around until June happens. That's
No.
why they did that in May.
No,
And that
I
probably
think that
contributed
was part
to
of
May's
the
rally.
move. April was a down month. Maybe people were anticipating sell in May and go away, so that moved forward
Right.
1 month. And May is kind of like the smart guys that are winning billions of dollars are like, how do we want to be positioned in the second half? Because we got to start thinking about this now, because our positions are so big. It's going to take us a while to get to where we want to get.
September, one cut this year. Is that what you're thinking about?
Okay,
Market's immediate knee-jerk reaction, up or down?
I think one cut this year, but if the data, it's data dependent, and I also think like you got to swap out at the Cleveland Fed with a new Fed, there. So I think you're starting to have changes, which ultimately I think set up for like the next move's a cut. If it's September, October, November, and then I think that starts the cut cycle.
Okay, so you're thinking a little bit of a pullback response to that, and then a rally into the end of the year would be your best bet.
And we'll have gyrations in here,
Of course.
panics, but ultimately, given all the spending that we see from a tech, from an AI perspective, chip, software, unless you have a telescope here, it's hard to find that recession.
Right.
You know what? Go ahead.
With small
Your last-
caps
you got
having
your
a
last
great
word.
small caps having a great day today,
Right.
that is certainly not emblematic of a market that's on the verge of a recession. or
100%.
An economy that's on the verge
People
of a recession.
looking for value.
If we were on the verge of a recession, the small cap stocks would be getting pounded.
Yeah. Okay, good. Your last word.
Look, my last word is...
Your last word is
my last
you've
word
gone over. Now that you're known throughout the New York, once you hit the New York Post, the beginning of my career as the most famous guy on Wall Street started with a photograph of me standing like this on the floor of the exchange. The Dow was down 600 points, and that in fact was not why I was raising my hand in fury. It was that I had gotten the bill for my son's bar mitzvah, and that was what really killed me. But it was what started my career. You are now in the New York Post. That is huge. Whatever we think about the Post and the people behind it, it doesn't matter. That is taking you to the next level. It's epic. It's legendary, and it's warranted. You deserve it beyond the Call of Duty. Your drip is just unbelievable.
And look, and I can't wait till our new sneakers come out.
I know. We got look. You wear it with such confidence. Everybody should look at you and get that feeling that they do. That's why we do what we do, right? We come to work. This gentleman is still an old Wall Street guy. He's wearing his solid suit and his Gucci and his sneakers. Actually, those are great. The Solomons. But we're the new generation of Wall Street, where we need to dress and drip with a sense of confidence that's looking towards the future, and it's got that little special thing that you and I have that's so amazing. That's what makes us Einstein and Ives. Forget about it. I love you all. This is Trade Like Einstein. This is Einstein and Ives. We are just breaking it down for you all. Today's session was epic in every possible way. You can take everything that was said today to the bank. Tim Anderson, one of the smartest guys down on Wall Street.
That was great.
My man
That
Dan
was
Ives,
awesome.
absolutely the greatest tech
That was
analyst
great.
in the business, and you got the Einstein of Wall Street. So anyway, thanks for coming. We appreciate it. Money News Network, Trade Like Einstein, Einstein and Ives, and our special guest, Tim Anderson. Kicking ass and taking names, baby.